BYD, it's a bigger car company than Tesla. They have a much bigger battery company than Tesla, of course. I mean, they are the second biggest battery company in the world. And they're also very vertically integrated. They manufacture even iPads for Apple. They do an incredible amount of things. However, Tesla's market cap is currently sitting at 1.23 trillion US dollars. In contrast to that, BYD's market cap is sitting at $115 billion, about a little bit less than 1/10 of Tesla's. Xpeng, on the other hand, are sitting at 20 billion US dollars. Clearly a tiny fraction of Tesla. Now, intriguing, a lot of investors lately are wondering, could Xpeng be the next Tesla? I mean, even if Xpeng was only worth 1/10 of Tesla, that would still mean Xpeng's stock price would increase by a factor of 6 times what it is today. BYD's current price to earnings ratio is at about 23, price to earnings, yeah? Tesla's is at about 260. The stock price of both companies is intriguing, isn't it? A lot of people say that Tesla's stock price is just massively overvalued. Some people say it's undervalued. A lot of people say that BYD is drastically undervalued, and the company is, well, the media believe, crushing Tesla. Now, the stock price doesn't reflect that. It doesn't reflect the fact that, BYD does have more market share than Tesla in terms of car sales. Of course, we know that that's not everything. Interestingly, Xpeng are following Tesla's playbook. There's no question they are. And in many ways, they've already been doing this for a long time. They already make vehicles with the largest gigacastings in the world, even bigger than Tesla's. The 12-ton gigacasting for the X9, for the Xpeng X9, is the biggest in the world. The G6 uses gigacastings to reduce its weight compared to rivals by hundreds of kilograms. It's a winning formula. Tesla uses full self-driving with only cameras. Xpeng is going in the same direction, moving towards vision only. But Xpeng, more importantly, is moving towards robotics. And that has had a big impact, AI and robotics, on the perception of the company by investors. The performance of these three companies over the past 12 months has been quite stark, quite different. One of them has done okay. Tesla stock price is up over the last 6 months by just under 8%. BYD's stock price has not done so well. Xpeng's has skyrocketed. Interestingly, though, the media appears to be playing the BYD tune. They're very positive about BYD generally, but quite negative about Tesla. Let's have a look at these three companies. Particularly, let's focus on BYD and see how the stock price has played out for investors. Because sometimes if you follow the media's advice, and a lot of the media have been saying BYD are the company you should be investing in, or at least certainly posting very, very positive information about the company. Now, you would think if you follow that information, you'd be investing in them and you'd be making money. But that hasn't worked out. That hasn't been the case for investors this year. Okay, guys, the prevailing narrative right now on BYD is this, right? BYD shares are rallying as market leadership and new safety ratings boost confidence. This is from Primary Ignition. In fact, numerous sources are reporting this positive news on BYD within the last 24 hours, saying their share price is mounting a comeback, a rally. So is this actually accurate? Is the market seeing BYD as, well, the stock to buy right now? BYD's price to earnings is currently sitting at 21.98 or 22. Tesla's is in the hundreds. So BYD's valuation makes them very cheap as a company in comparison to the valuation of Tesla. Now, that's really a fact, whether you like it or not. But does that mean that BYD's, you'd think, right, their stock price would be doing well based on how good of a value it looks like? It looks like it's an absolute bargain in comparison to Tesla's stock price. Well, okay. The news today says BYD have 15% EV market share worldwide this year, beating Tesla at 13%. Now, you'd think BYD shares would stage a rally, and they did. They're up by 3% since that news came out. So, The resurgence follows a triple dose of positive developments for the Chinese electric vehicle giant, including reinforced market leadership credentials, a top safety award for its newest model, and aggressive year-end sales initiatives. BYD very aggressive on their sales initiatives. PrimaryIgnition.com says this: fresh data from TrendForce's third quarter 2025 analysis solidifies BYD's position as the world's premier electric vehicle manufacturer. The company maintained a 15.4% market share in electric car sales, preserving its lead over Tesla's 13.4% share. Despite Tesla's robust quarterly growth and intensifying competitive pressures, BYD's volume advantage remained unchallenged. Now, this is just EV market, by the way, guys. This is not plug-in hybrids. So if you've watched Solving the Money Problem, he did a video recently where he compared Tesla's EV sales to BYD's. It was really good, a good video, but it wasn't quite accurate in terms of presenting BYD's overall market share versus Tesla's when it comes to just EVs, not plug-in hybrids. When it comes to just EVs, it's actually true that BYD is outselling Tesla. Does that matter? Not really. But anyway, safety endorsement. The compact BYD Atto 1, which is the Seagull, very confusing, guys. The Seagull has three names. It's called the Atto 1 in Western countries. It's called the Seagull in China and some places, and it's called the Seagull Plus or something like that in some other places. Anyway, it got a maximum 5-star safety rating in Australia. To be honest, that doesn't mean much because it got a 5-star rating elsewhere in China as well, which is pretty much the same test. Pricing promotions. Selected models, including the C-Line 7, Seal, and Atto 3, now feature $3,000 cashback incentives. That's nice. And shares have gone up. Now, volume growth is coming at a cost. BYD's market share victory carries significant financial implications. The company's third quarter net profits contracted by 33%, reflecting the dual impact of fierce price competition and expensive global expansion efforts. The current $3,000 discount program highlights the challenging landscape BYD must maintain aggressive pricing to counter Tesla and contain emerging rivals like Xpeng, Xpeng, and Zeekr, and also companies like Xiaomi in China. However, the company's vertically integrated structure and in-house battery production provide a competitive buffer unavailable to many industry peers. The thing is, though, we need to know what BYD sales have been in November and December. Because for the past few months, BYD sales have begun to stall, and they haven't actually done any better than last year, especially in October, where their sales were about the same as last year. And the reason they're about the same as last year, even though their sales fell for BYD in China versus last year, is because they shipped more cars, exported more cars with their large shipping fleet. And it's also because their plug-in hybrid sales crashed. Their plug-in hybrid sales in China declined by around 30%. So BYD is certainly facing a challenging time. And as a result, its share price has actually not reflected this confidence that the media are talking about. If you look at its BYD share price over the past 6 months, it's actually fallen by 26% over the past 6 months, down 26%. That's including today's 3.3% rally. Over the last 6 months, Tesla's share price, it's, I guess if you look at it from its low on Thursday, the 5th of June, it was sitting at $284 then, and today it's at $391. So it's gone up a fair bit. But if we look at just the 6 months, to be fair, then the price has gone from $350 to $391. So it's gone up by about 8%. But if we compare these guys, and both of them, Tesla's doing very well, but compare them to Xpeng's share price, and that's a completely different story. But if we compare BYD to Xpeng, their Chinese rival, well, actually Xpeng's stock price has gone up by approximately 8% in the last 6 months. However, in the last year, the last 12 months, Xpeng's stock price has gone up by a staggering 80.2%. 80%. And it appears to be pretty consistently sitting at that 80% increase versus 12 months ago. So I think the BYD story is starting to show a few cracks. I think it's obviously the growth is slowing down, whereas their rivals' growth is speeding up. For example, Xiaomi growth this year has been incredible. The growth of Elite Motor this year, more than 100% increase in their sales. Deepal, really massive increase in their sales as well. What about Xpeng? Their sales have increased by about 160% over the last 11 months versus last year's 11 months. The Geely Geome brand, their sales have increased by well over 150% as well. BYD sales are clearly still massive, but clearly struggling, particularly in China against their rivals. So it's going to be intriguing to see what happens over the next 12 months. But I think the media narrative is being shaped by advertising dollars. And a lot of advertising dollars are being spent by one company. Very few advertising dollars are being spent by the other companies. So it's very important, I think, to base your judgments on the success of different companies by the facts, by the actual numbers, by the margins. But it's very hard, guys, to find those numbers because we see those numbers from companies. We see profit margins. Some of them can be a little tricky though, can't they? I mean, some things can be misreported. And right now, there's a lot of claims by analysts and YouTubers that some numbers are being fudged in these quarterly reports and sales numbers. Some numbers are being exaggerated or completely manipulated. I'll have some new videos coming up about that and my thoughts on what's happening. Thanks for watching.